Welcome everybody to a new analysis of Tradomics. My name is Dario, and in this video I'm gonna give an overview regarding the main stocks listed on the SOX index, namely companies that are active in the semiconductor industry. So this is a new video, first of its kind. I hope you're gonna like it. And for those of you that are new to the channel, I wish to introduce these videos by saying that I analyze a selected number of stocks every month, and primarily those listed on the New York Stock Exchange, using a unique data driven methodology that you will not find anywhere else. So, unlike traditional analysts, I apply a quantitative approach that statistically predicts the probability of a price movement over time. So, this means that if you are not just guessing or following trends, so you are trading with an edge. So time is in everything in trading and investment, and if you own or plan to buy a stock that is in my analysis feeds, I would encourage you to subscribe so that you get notified as soon as possible, so you're not gonna miss any opportunity. So I would encourage to hit subscribe and turn on notification, because in the stock market the right timing can make all the difference. So hence, if you want to know also more about our methodology, I suggest you to click on the pop-up button on the right hand side, introduction to the T cycle analysis. So regarding the stocks that I have here in the video, I have to also flag that those stocks are really challenging to analyze. And compared to other videos, I'm gonna start from the index in which they are listed. So having an overview regarding the index can help definitely us to better segment all the different cycles for each of the stock in focus. So this is the Philadelphia Semiconductor Index. And you can see here from this top that was done on the 11th of July 2024, we have started T plus 5. T stands for Tracy Point, and T plus 5 is an yearly cycle here that has this shape. And this is called an upward cycle. So basically, a cycle that is connecting two different tops, one top and another top. Of course, the second top here, you cannot see it because it's still in development. And the beauty of this quantitative methodology is that you can gauge time at every point in the chart. So from this top here, the time elapsed has been 141 bars. So we know that to close or to complete with a minimum time nearly T plus 5 cycle, we need between 189 and 339 days. So at the moment, we are basically in a median duration of a T plus 5. Having said that, this is an information that might be useful, but we have also to divide all the cycles into sub-cycles, shortening the duration. So here you have a T plus 4, 6 months. Here you have T plus 3, 3 months, 1 month, and so on. And this segmentation help us to better understand what could be the next pathway that the price can follow. So as another flip of the coin, if here we have the T plus 5 yearly upward cycle, from this low that was done on the 5th of August 2024, we have potentially the beginning of a new 6 months or yearly downward cycle. And so far, this yearly downward cycle or 6 month downward cycle, because at the moment we can have both the options, has done a first positive T plus 2 monthly cycle and a second negative T plus 2 downward cycle. Negative is because the swing in which it ended was lower compared to the swing from which it started, and positive, it's basically the other way around. The sum of a first monthly cycle and a second monthly cycle gives a T plus 3 months cycle. And if we gauge the total duration, we have exactly a duration that is 81 bars, so between 48 to 89 days. So this is mostly, so this is close to the maximum duration of a T plus 3. And after a T plus 3, we have a new T plus 3. And this T plus 3 has been divided as a first bi-weekly cycle, second bi-weekly cycle, and third bi-weekly cycle. So you see that we have a rhythm that in this case was slightly different compared to this rhythm here. Of course, in this first case, we have had as well the T plus 1, second T plus 1, third T plus 1, and fourth T plus 1. So here we have 4 times a T plus 1 or 2 times a T plus 2. But in this case, at the moment here, we have just 3 times a T plus 1, 1, second, and third. So we have a different rhythm. So the market has had a different rhythm in the second part of this T plus 4 cycle um, that was done from the 27th of November 2024 until basically the Friday's candle occurred on Friday 31 of January. So we can say that at the moment we have mostly a steady state situation because the price has been trapped in a range, and I can also draw the channel here with an upper edge and the lower edge in an area between $5,466 and $4,725. So the market is not giving us particular information regarding the future direction of the price, at least for the midterm, but we have just sideway move between the two upper and the lower edges like this. So we have to then keep into consideration two swings. This swing is important because if the price will return back to this top at 5,525, then we can have a cycle that's an upward cycle that can turn into a positive one, and therefore the price can continue the rally to the upside and to reach this target here at 5,931. This, of course, has not happened yet, but this top is important to monitor, because from this top here we have evidence that at least we have a T plus 3 or potentially even a T plus 4 cycle, so a 6-month cycle that in case will turn into a positive one before its minimum duration, then we can expect a rally to the upside. Vice versa, we have also to monitor this swing here, because this swing is a checkpoint in case we can have further downtrend to the downside. Because from this low here, we might have not just a weekly cycle, but a T plus 1. And if this low will be broken before 13 bars, then at the time that the low will be broken, then the rest of the candle will continue to push the price further to the downside. Okay, so let's say if, for example, we're gonna break this low after 7 candles, then we will have at least other 5 candles to the downside. If we break this low after 11 candles, then we will have at least a couple of days further to the downside. So these two conditions haven't happened yet. So it's important to monitor this top and this low to have further information about in which direction the price can push, either to the upside or to the downside, and how long. So having said that, let's jump onto the first stock, which is Nvidia. So the chart of Nvidia is self-explanatory, at least for those that are using this quantitative method based on cycles. What is the difference compared to the SOX index? Well, you can notice that this top, in which potentially we have the beginning of a T plus 4 6-month cycle, is higher compared to this top, in which we have the beginning of a T plus 5 upward cycle. If you remember, on the SOX index, we have exactly the opposite situation, in which this top T plus 5 is higher compared to this top T plus 4. So what does it mean? Well, the first thing, it means that here we had a resistance that was broken with this top and this top. And here the technical analysis finished the key message. My key message is that we have a T plus 5 upward cycle that has been turned into a positive one. It has been turned into a positive one because this top is higher compared to this top. And this top as well is higher compared to this top. Now, if we gauge the total duration in which the first top broke up the swing from which the cycle started, we have 107 bars. And if we stretch the duration until the second top, we have a duration of 137 bars. And if we stretch the duration until Friday's candle, we have 154 bars. So what does it mean? It means that the price in this situation has to return back to the tops, especially this top here, the highest tops, in a time window encompassed between 189 to 339 days. It means that despite DeepSeek or whatever you want to attribute this gap down, the price has to return back to its absolute tops. And this return back to these absolute tops can occur until a minimum duration. So the price can return back to the absolute tops at the 189th bar. So basically by the 24th of March 2025, or we can even prolong the duration until 339 bars. So we can forecast that the price will return back to the absolute tops by end of August or beginning of September, because end of August we have 300 bars. So we can return back to the tops by end of September 2025. And why this is something that might happen? Because we have the T plus 5 upward cycle that turn into a positive one. So it's the same situation that we get here. This T plus 5 has been a positive cycle, and this was a yearly cycle. And if you see, we have continued to rally, and the rally lasted how long? So the rally lasted about 205, 206 days. So when a cycle turns into a positive cycle and we haven't reached yet the minimum duration, we can expect that the price will continue to the pathway, in this case to the upside, until a minimum, medium, and maximum duration of the cycle in focus. So therefore, Nvidia, or the price of Nvidia, will have to abide again this shape of this yearly upward cycle, unless we do not have in the pathway Bayer tongues, which are market fakes move. Bayer tongue is something that you can review in our introduction to the T-cycle analysis. I'm not gonna give the definition and what is important, the Bayer tongue. But if we follow a regular pathway, we have to return back to the tops. And why did we need also this gap down? Was it because of the DeepSeek or the fear of the market that now we have a Chinese artificial intelligence that it's let's say cheaper than all the other ones? Look here. Of course, on this channel, we are not gonna comment any news because the news are basically opinions, and here we are data driven. Look, this is a swing in which we have the beginning of a T+5 downward cycle, and here we have the closing of a T+5, potentially the closing of a T+5 downward cycle after 309 bars. So basically, we were really stretching time to close a T+5. What they can do on top is this is a T+5. What they can do is that given that we have eventually other 30 bars, they can do a market fake like this, or a bounce of the dead cat and return back to the absolute lows. They have this time again to do another cycle of T+2. They have time to do eventually this market bounce or fake bounce back to the upside until 339 days. So they might have this, they might do this thing until 11 of March 2025. So we can expect eventually another move of this kind. But if you calculate the percentage in which this market or this other cycle can happen, is 38 possibilities out of 339. So it means that we have 10% possibilities to have this other cycle to be attached to this T+5, and all the rest of possibility to start having the continuation of the mid-term rally or even the long-term rally, because this is a long-term rally. And it's not the case that we landed on the moving average 200 period, and now the moving average 200 period is support for the price. And if we also gauge the duration of the last T+2 cycle, we have look 25 bars, so minimum duration. So eventually for the next week, they can continue the downtrend. We have to see whether the moving average 200 period will continue to oppose or let's say stop the downward trend. But then we will already know that we have to return at least back to fulfill this gap down. And this is a move that can be predicted because you know the rules of the cycle analysis. Okay, so for Nvidia, this was a retracement, short-term retracement, but I'm expecting a return back to the absolute tops. The second company in focus is Intel. So Intel has definitely a different situation compared to Nvidia, because from this top here we have at just a harsh downtrend. So Intel is coming from mid-term downtrend. With mid-term I mean more than a year, in which the price has kept falling. So if we gauge the total duration from this top T+5 here until Friday's candle, we have 274 bars. Now the thing is that potentially this upward cycle that is negative because it's not the minimum in which potentially it ended is lower compared to the minimum from which it started, can be closed even here at 219 bars. So potentially this top is not just a T+3, but a beginning of a T+5. Why this is important? Because in order to develop a T+5, we need a certain amount of candles below this top. And in this case, we need a duration of a T+3. So we need at least a number of candles that is between 48 to 89 bars below this top to begin T plus 5. And at the moment, we have a certain amount of candle that are, let's have a look, that are 57. So we have already the time to say this is not just a T plus 3, but a T plus 5. But if it's not a T plus 5, then what we need to expect for the next months or next 2 months is a hook to the upside in order to close this T plus 5. Okay. So we need something like this. We have already this condition, but eventually they still have time to do this hook. And how long do they have in order to close this T plus 5? The T plus 5 upward cycle can be closed by at most C 339 at most the 6th of May 2025. So if this is not a T plus 5, you can expect a hook to the upside at most by the 6th of May 2025. So this is the first key message. What about the second key message? Of course, the second key message is coming from the downward cycles. So here, this T plus 5 is a negative T plus 5. And also here, we have potentially the condition in which this T plus 5 downward cycle is closed. And the duration of this T plus 5 has been of 218 bars. But of course, we know that a T plus 5 can last even until 339 bars, excluding Bayer tongues. So this T plus 5 can be closed by when? Can be closed by the 5th of March 2025. It means that we can still have room to continue to fall until March 2025. Okay. And if this is not the beginning of a T plus 5, but just a T plus 4, like in this case, then we have to return to the absolute low here, which is at $18.64. So on Intel, the second key message is that you need to be really careful to open now long position, because we have room for the entire next month to continue falling and reaching this low, as I said, at $18.64. Okay, because the T plus 5 might not be finished here, and this impulse to the upside for a T plus 5 is not sufficient, or it's really let's say it's really weak for a T plus 5. See, for example, in this case, there was a complete detachment of the cycle. Here, I don't see this detachment, but I see that this T plus 4 is potentially again part of this second T plus 4 and this first T plus 4. So it means that this structure can be still part of this T plus 5. So be really careful on Intel regarding the price for the next month, because potentially I see more room to the downside rather than the upside, especially if here we have already a T plus 5. Okay, so be careful to this condition. We have a nice support in this area, 18.54. It might be that this support will hold a little bit, and then if we will start seeing a look back to the upside, and we will start going higher this top at $22.41, it means that there will be sign of reversal. Okay, at the moment we have a steady state situation, there are no sign of reversal. We might be already again in a T plus 5 downward cycle negative, so be careful to potential room for the downtrend. The first green, let's say positive sign, will be when the price will break this top. So the next company is Advanced Micro Devices, and this chart setup is particularly interesting. and I will show why. So first of all, we have to consider this low as the beginning of a T plus 5 that was done on the 26th of October 2023. Now, if we gauge the total duration from this low to this low, for example, we have 192 bars. 192 bars, it's already a minimum duration to close a T plus 5. So potentially from this low here, we have the beginning of a new yearly cycle. What does it mean? It means that if from this low here we have a T plus 5 cycle, this T plus 5 has already turned into a negative one. And if this it's a negative cycle, then we can foresee more push to the downside, and push to the downside that can last up to a minimum duration of 189 bars. And 189 bars is that the price of AMD can keep falling at least until 7th of May 2025, at least, because otherwise it can keep falling even for longer, even until end of summer 2025, so end of summer this year. So this is the first consideration that I have to flag out. Second thing is that the T plus 5 can last up to 339 bars without considering Bayard tongue. And if we now stretch the total duration, we have until Friday's candle, 317 bars. So the second way to see the chart is that we are really stretching time to finish a T plus 5, and therefore we have to start a new T plus 5 soon. To start a T plus 5 soon might be that we can start the T plus 5 this month. And T plus 5, it means that we have to start with an impulse to the upside that should go higher the stop, and ideally even higher the stop. So we have to imagine a shape of this kind. And here you see complete two different ways. So one is suggesting further push to the downside, and another one is expecting a bounce back to the upside again. So without again, because we have had just bounce of the dead cat, a bounce to the upside that is more than this um, this, let's say, fake bounce that we have seen so far, but something that is more consistent, and as said, something that can reach at least this level of price, which is around $160 to $170. So which of the two plan is the right one? Well, as usual, we have to study also the upward cycles, and this is why it's interesting. We have a really important clue. And which one is it? Well, T plus 5, from this top here, we have the beginning of a T plus 5. If we gauge the total duration from this top to this top here, we have 84 bars. 84 bars is just the duration of a T plus 3. Okay, so we have added the first T plus 3, and then we have a T plus 4 6-month cycle that from this top to this top has done a first T plus 3. So I repeat, first T plus 3, then we had a new T plus 4, and this T plus 4 has been divided in the first T plus 3 and the second T plus 3. Okay, now from here we have a new cycle. Okay, this cycle can be a T plus 3. But the key important things to read this chart is the following, and this is really the advantage. Well, if we gauge the total duration from this top here to this top here, we have 148 bars. So this cycle is not enough to close a T plus 5, because 148 bars is not the duration of 189 bars. And someone might question, Well, Dario, okay. So I understand the methodology, and then I can seek another top in which the T plus 5 can be closed. This top is a valid one? No, 186 bars. But this one might be a valid one. And I can say, yes, of course, this is 208 bars. So here we have a T plus 5. But it's not truly like that. It's not truly like that because in order to close a T plus 5, we need a condition in which 3 degrees less of a cycle, in this case a T plus 2, so T plus 5 minus 3 is a T plus 2, a monthly cycle needs to be positive. So we need at least 20, a cycle in which between 24 and 44 bars are basically giving a positive upward cycle shape. And in this case, we don't have it. We don't have it because we have a positive cycle, and you can say it here. You can see it here like this. But this positive cycle is not a T plus 2, because if we gauge the total duration is 7 bars. And 7 bars is not a T plus 2. 7 bars is just a weekly cycle. So what can we say about this thing? Well, we have the earnings release that will be issued on Tuesday, 4th of February. And if we gauge the total duration, we have 225 bars. This means that the earnings release might be a triggering point to do what? To start from this low, eventually a new T plus 5, and to also close a T plus 5 upward cycle. So begin a T plus 5 downward cycle, but also closing a T plus 5 upward cycle. And this is a perfect time. So you see how algorithms are coded and planned to do something in a specific time range. And the earnings release, beside the change of fundamentals, beside the giving a new sentiment to investor, whatever you want to call it, needs to abide certain moves that are predicted by the market upfront, because hedge funds or investment funds do not bet on a single earnings release. They need to abide a certain time range in which cycles needs to be developed. Okay, and when you have billions of dollars, you have to plan, or you have to code an algorithm that is able in a certain time window to sell or buy a certain bunch of stocks, because they need time. They cannot do it in just one day. They cannot do it in 2 days. They cannot do it in 2 weeks. They need time to sell or buy the slot of the stocks that they need or they want to. So we have a high likelihood that this earning release might be a triggering point to develop a new T plus 5 or to close a T plus 5. We have, though, even another likelihood, just to complicate complicated stuff, that this earning release might be a triggering point also to have a lower point, so they can open with a gap down, and from the absolute lows start a new T plus 5. So either they start with a gap up, okay, like here, for example, considering the volatility of AMD, and they do something like this, or they can start even with a gap down and start coming back to the tops. So you have to be aware of these two situations. But considering that we have T plus 5 that is 317 bars and this T plus 5 upward cycle needs to have another tail to the upside, the likelihood is definitely higher toward the upside and not to the downside. Okay, and that's why this stocks or this chart setting is really interesting, because we have really more probability to the upside rather than the downside. Okay, and this is before the earnings release, and I have given you the reasons why. Okay, so let's move to the next one. The last company in focus is Broadcom. I left intentionally Broadcom at the end of this video because this is the most challenging chart to read. And I will tell you why. So, first of all, here I have some doubts whether this top might be the beginning of a T plus 5 upward cycle, or whether this top might be the beginning of a T plus 5 cycle. I have this doubt because we are coming from such a strong rally to the upside. Then the last T plus 5 upward cycle that I was able to define was this top. But this one happened on December 2021. So basically, we have had such a strong trend to the upside that there were no possibilities and no time to spend um, more than 48 bars lower than a top, because we have had such um, T plus 4 cycles that were turned into a positive cycle with in a little time that was not possible to segment the chart, dividing cycles in T plus 5s. So basically we have just T plus 4 cycles. And this is a little bit of a problem because when we have T plus 4 cycle, we lose a little bit the compass, or we lose a little bit the rhythm. So from this top here, we have evidence that we have a T plus 5 upward cycle, because in this case, the time that was spent to lower this top before it was broken up was roughly 81 bars. Okay, so with this candle we broke up this top. This means that if you have followed the analysis so far, of if you have already seen the video introduction to the T cycle analysis, if this is a T plus 5 upward cycle, then we have T plus 5, so the first T plus 4, then retracement, and then we will return back to the tops. We will return back to the tops in a time range that is encompassed between 189 to 336 bars. Therefore, we can return back to the tops by 189 bars. We can return back to the tops by Friday, 21st of March 2025, but we have time until um, until October this year to return to the tops. Okay, but we have also a situation in which this top can be the new T plus 5, and if this is the new T plus 5, then we don't have to return back to the absolute tops. Okay, so this is the main difference. But considering that the SOX index as at a T plus 5, and then now we have seen recently a T plus 4, here, just because the index is giving me additional information, I would consider this top as a T plus 5 and then this one as a T plus 4. This means that I foresee Broadcom, the price of Broadcom, to return back to the tops, because we have already a condition in which a T plus 5 has turned into a positive cycle. Even if I don't have the certainty that this is going to happen, because here you see that I have a question mark. But another clue is coming from Nvidia. Nvidia has a definitely clearer pathway or clearer chart, and I'm let's say the probabilities that this video is returning back to the tops are definitely higher. Therefore, given that Broadcom is the direct competitor of Nvidia, I think that they will follow the same pathway. So I'm expecting Nvidia to return back to the tops, but therefore also for Broadcom, I expect to return back to the tops because we have a T plus 5 potentially here that was similar to the setting that we have on the SOX index, and also because Nvidia, the main competitor, has a T plus 5 positive cycle as for Broadcom. So we have two charts that are basically telling the same story. Okay, so that's why I'm more in favor of Broadcom to return back to this top at $251.21 and of course beyond. How can we understand it? Of course, we have to monitor it over time. So in this case, we have the beginning of a T plus 2 here that potentially has finished the first weekly upward cycle. So if in the next week we will return back to $226.80 with at least 1 day below desktop, then we will have a T weekly cycle that will turn into a positive one, and then we can see further move to the upside. In this case, though, you have also to consider that Broadcom has had a gap up here. So potentially before having this move, we can return back to an area which is at $210, $211. And if we return back to this area, then we will have, and if we will return it in a couple of days, we will have the condition to close a weekly downward cycle, okay? Um, what you have to watch eventually for a further downtrend is this low. So if this low will be broken, then we will have a negative cycle, and this negative cycle can trigger more downtrend. But before this, before it will break this low, we have also to measure the number of candles that in the meantime will be developed. So you have to carefully monitor this low, and you have also to measure how many candles there will be before, so that you can statistically predict how long the price can keep falling eventually if we follow this route. Okay, at the moment the market is not giving us particular information, so we have to monitor it over time. So unless you are an intraday trader, it's not savvy at the moment to open a short position or long position on Broadcom because the situation is not really clear. Okay, so that's the key message I can give you on Broadcom as well. And this was the last company for this episode. I hope this video has given you a lot of insights because there were many. These are all free videos, so if you want to support my job, you can give a like. If you have a further question, feel free to to type your question or your comments into the comment field. And in order to get notified as soon as possible regarding the stocks that I analyze on a regular basis, and if you have your favorite stocks already in the video that I publish, I would recommend to subscribe it, because as soon as you get notified, as soon as you will be aware about a certain route, as soon as you can manage, you can better manage your position in order um, to avoid risk and catch opportunities. Thanks for watching, and see you to the next episode.